Hey guys, how you doing? Austin Hilton here with another stock recommendation video. And this is one of the top stocks that I think you should look at buying now. This stock is in the EV space. It's probably one that you haven't heard of. And we're going to get into it in a minute. I'm going to give you a little bit of a sneak peek. I think that this stock can go up by 40+% in the next 12 months. I think this stock is poised. This is an EV company that is in pre-production. They've got 3 revenue streams. They are a North American company. You want to stick around for this one because this one's pretty cool. And frankly, if you think my estimate is too high, then great, cut it in half. There's 20-25% plus gains from this stock. So I think this is a 40+% stock in the next 12 months. So we're going to get into that in a minute. With all that said, please remember that this video is for entertainment purposes only, and as always, please consider subscribing to the channel. Hit that bell notification so you get notified when I release new videos. I release new videos every single day, guys. I'm here for you every day in the trenches, looking for videos and stocks. Not videos, that was a mistake. Looking for stocks for you guys that I think will go up in value at least 20+%, and trying to bring you some stocks, frankly, that you haven't heard of. That's what I'm here for you. So please consider subscribing, become part of the community, as well as drop a like on this video if you get value out of it, because that's my goal, is to try to bring you brand new stuff that you haven't maybe seen before, or shed a little light on existing stocks. So let's get into this. This stock, this company is called Canoo, C-A-N-O-O, and its ticker symbol is GOEV. I'll put that up below so you can see that. This is a company that is, again, a North American company, and I think that they are definitely going to be a player in the EV space. They're in pre-production now. This is a company that came public through the NASDAQ through a SPAC merger in December. Okay, so their stock really hadn't been trading that long per se. The SPAC merger was official in December. It's been a highly volatile stock, trading all the way up to $22. Right now trading in about the $15 to $16 range. In a minute, we're going to go look at its chart. We're going to go look and see kind of overall what's the consensus of this stock. What does the press think about this? What did maybe some investment bloggers think about this? What do the analysts think? It's not a lot of analyst coverage on this, so if you do put stock into what analysts say or whether you don't, that's fine, but there's not a lot of analyst cover for this right now. But I think that this company is definitely poised for some significant upside potential. Okay, so that's again why I'm bringing it to you. Okay, so if you see me looking down, I've got a few notes here just to cover, and we're going to cover these notes really fast, and then we're going to jump over and we're going to look at this stock. We're going to look at some of its charts and some of this other stuff. Okay, so remember, I said that it's in pre-production. Okay, they've really got 2 EV cars or vehicles that are in pre-production. These are really kind of, in my opinion, not going to be going straight up against the Teslas of the world. They're going for more of a lifestyle, different design, different approach. Go check out some of their designs. Go look up on Google, see what some of their particular cars are going to look like, in fact, or hit their website, things like that. But again, and they've developed their own proprietary technology. Let me see if I get this right. They called it a skateboard technology, which is their proprietary kind of how they build these cars, and they're going to actually license that technology out. That's going to be one of their revenue streams. I've mentioned this a couple times. They have multiple revenue streams. We're going to get into that here just in a minute. Okay, so after the stock went public in December after the SPAC merger, it jumped about 15% on March 11. Now it did, from that pre-trading up to that, it did bottom out at about around March 8th, kind of after that, that 3 or 4 week NASDAQ fall that we had now 2-3 plus weeks ago, right? But they announced on March 11th that they're going to also be launching a sport pickup truck in 2023. Okay, remember they're basically they're basically building their cars right now. There's nothing on the street as of yet, but pre-orders begin for this truck in the second quarter of 2021. So that might be something, again, and the market really reacted really well to it. Again, go back and look at what happened to Tesla's stock when they announced their truck, right? So GOEV is going to be bringing a truck as well, okay? So let's look at their revenue streams are going to be from its engineering and its licensing technologies, or its licensing opportunities, right? So this business includes consulting and contract engineering for other EV manufacturers. So they've got multiple revenue streams, as I've already mentioned. So they're selling their own cars as well as licensing opportunities. Okay, So within that, looking forward, their estimates are as follows. Their estimates for their engineering services, that's their engineering services, basically consulting engineering for other EV manufacturers. They think that that's they're estimating that's a $450 million business by 2025. That's just for their engineering services. That's a 39% CAGR, say that really fast, from 2021. Canoo is expecting to generate $79 million in its first year of lifestyle production, okay, with sales growing at a CAGR of 147% by 2025 and generating $1.19 billion in revenues by 2025. That's basically selling their cars, okay? They also have a line here, B2B will focus on the last mile delivery market, and this segment is expected to grow by a CAGR of 100% by 2025 to a $700 million business. So they've got, again, multiple revenue streams. That's one of the really reasons I really like this company, is they're not dependent solely on, for example, just creating and selling their own cars. They've got engineering, they've got this last mile delivery market. So they're in multiple markets, all of which add up to obviously help their overall profitability, cash flows, things of that nature. Now, I mentioned this, the stock's trading at about $15 right now, and I think that this is a 40+% stock by 12 months. Okay, so with that said, let's go look at this stock and look at what's going on with it. So let's go do that. Okay, as I mentioned, the company is Canoo. You already know that. Its ticker symbol is GOEV. Right now, they ended trading at $15.38 on Friday, March 19th. They're rated right now, guys, as an outperform. I really like that. Obviously, that's as strong as you can get, and that's on this particular website, TipRanks. I like this site because it does a very good job of consolidating multiple data points. Right? I want to do my own research, which is why I bring you this video for you. You guys go do your own research as well. Put this through your own particular analysis processes and see how it feels out for you. But I think that this is an opportunity for a long-term growth play. I think that at $15 right now, I think that it could easily get to $23, $24, $25 within 12 months. Again, we're in kind of pre-production, 3 revenue streams, all that kind of stuff. Okay, so again, it's rated right now as an outperform. Okay, what I particularly like some of these little boxes here because it kind of gives me a couple of data points, right? And that's number one. The analysts are rating it as a moderate buy. There's really only 1 or 2 analysts covering it right now. Again, whether you like analysts or not, I tend to look at it just as one particular little data point, but it's not obviously the end-all be-all, right? I kind of like this. The blogger opinions. These are basically stock bloggers, things of that nature, are very, very bullish on this. It's 84% GOEV sentiment, as well as over the sector average of 69%. Okay, so I like this particular scenario. Look, insider activity have bought $5 million worth of shares in the last 3 months. Okay, that to me is a very good indicator. Can be. Depending upon if you, again, it's relative to you too, right? But I tend to look at what are the insiders doing? Are they buying? Are they selling? Right thing right there. So they're obviously right there. They've bought $5 million plus in the last 3 months. TipRanks investors. This is basically tip investors who have put their portfolios on TipRanks and made them public. So they view this as a very positive scenario with last 7 days, 9.34%. This one's a big one for me. News sentiment. What is the news saying about this? Are they very bullish? Are they bearish? Right now, we're 100% bullish on this. I think that again, this gives me a really good snapshot, which is why I include this in my videos for you guys, is give me a really good snapshot. Whether you like the fact that hedge funds are not are putting money in, it decreased, by 400,000 shares in the last quarter. That's again, it's relative, right? I think it depends on the stock, and is the stock a good play for hedge funds and things like that. Okay, let's look real quickly at the chart. So we've got a 1-year chart here. Again, we know we went basically in December. Remember, I mentioned there's been a ton of volatility around this stock. We did hit a peak December 10th, basically pretty close to after it started trading after the merger. The SPAC merger hit a high of 22. Again, right there, we know that our 52-week high is 968 versus 24.99. 24.90, excuse me, 52-week range. Market cap, by the way, in case you're interested, is at $3.62 billion. 1 year per target price, $23. I think it's going to do a little bit better than this. but $23 right now, guys, represents about a 40% plus return if you bought it today at $15.38. Again, put this through your own fundamental analysis. Look at everything you feel you need to look at. My goal is very simply is to bring you this as a potential opportunity for you to look at bringing this into your portfolio. Okay, so the 1 year chart, again, showing us 22. We pretty much bottomed out here, not really including this on this side, pretty much bottomed out again on March 8th when we hit approximately 11.13. But look, it's rebounded very, very nicely with the overall, the market coming back and trading again back up to $15+, right? So that represents a very nice bounce back, resiliency moving forward, things like that. Okay, let me make sure there's nothing else I really want to look at. If you want to take a look at this, the analysts are recommending, again, a $23 scenario that represents a 49% upside. Again, there's really only there's only two analysts that are covering it. One is showing it at a $30, one showing it as a $23. If you care, this particular analyst is one of the top one on tip ranks, showing a 52% plus, 52% plus success rate, things like that. Again, it's up to you whether or not you put any credence in what the analysts think. I think overall, though, this is a really good opportunity for this particular stock. I think this is one that is poised to do really, really well. So a few final thoughts here before we wrap up. I definitely like this particular stock. I think that this one is an interesting play. Again, do your own due diligence, do your own analysis. My goal was real simple, guys, is to bring you this as an opportunity. It may or may not fit within your kind of what your goals are for your portfolio. I like EV, and I'm always looking for new EV opportunities. So here's what I like about this one. I like that they have 3 revenue streams. I like that they're North American production. I like the fact that they are really not going directly at Tesla. They're yet another EV play. They've got an EV truck coming out. They're looking to do what was it 1.19 billion in sales by 2025. They've got 400 plus million coming out of their engineering division or more. They've got and they've got additional revenues coming out of that last mile delivery component. So they've got multiple revenue streams, which I really, really like. They're not just a completely, they're not just manufacturing their own stuff, right? So I think that that's very interesting. And I think, again, I'm going to bring this home. What I always like to say is that number one, do your own due diligence, do your own technical and fundamental analysis, whatever metrics you want to apply, okay? Obviously, we know that not all of them will line up. This is a growth stock, a little speculative, highly volatile. We all know that. But I think that this is a very interesting one that could continue to gain momentum as we go forward. And if you're looking at a 12-month play, I think this one's pretty safe. Again, cut it in half. If you're looking for a 20% return, I think that we easily get a 20% return off of this within 12 months, give or take. So I'm going to wrap up there. Remember, this video is for entertainment purposes only. Again, if you got value out of this video, please drop a like on this video. It helps the channel out. It helps my video out. It helps me to just spread the word, and I would greatly appreciate it. As always, consider hitting that subscribe button. Become part of the community. I'm here every single day for you, bringing you these videos to try to help you navigate the market and just find stocks that are good long-term growth stocks. So I hope that you've enjoyed this one. I'll see you in the next one. Take care.